Hello there, my friends, and welcome back to another episode of TA with MK. My name is MK, or as my friends call me, Mac Dizzle. Just kidding, I don't have any friends, but if I did, they would definitely call me Mac Dizzle. It is a lovely Thursday, and as we approach the weekend, we wanted to give you guys kind of an update on the Bitcoin price, as it's doing a little bit of something it hasn't done in some time, which is provide us with a little bit of excitement, especially if you're a bull on Bitcoin. Obviously, if you're a bear, then it's not so good. But anyway, I want to give you guys kind of just a quick update on the lower time frames, kind of some areas of interest to be watching out for. Maybe speak a little tiny bit about the S&P 500, kind of what it's been doing as well. And then maybe just an update on my CHAINLINK trade. Now, if that sounds interesting to you guys, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Alright, so to start out, we'll just do a quick update here on the SPX or the S&P 500. Typically, I pull up the E-mini futures chart, but I wanted to look at the actual S&P 500 chart, the one that, of course, closes, for the day or at night. And we want to go over this falling wedge that we've talked about for months and months and months and months, but the biggest thing is as we spoke about in our most recent videos, is that not only are we at this top trend line, we're also at the 200. If I zoom in, it's the 200 SMA, which is this yellow moving average, and the 200 EMA, which is the blue one. And really, what we really want to see, and what price action is attempting to do as we speak, or at least at the time of the traditional markets closing earlier today, is it's trying to break the 200s. The question is it able to do it on this first go? Do we see something like we did back here, where it breaks it and then fails back into the pattern? Broke it, failed back into the pattern. That wound up being a double top. Not something we want to see this go around. However, the CPI inflation data came out today. The market was hoping for something around 6.5%. And I believe that's exactly what we got. So that was positive news. Now, there always is that buy the rumor, sell the news aspect to trading, something you need to be wary of, meaning that the market kind of rallies into the news and there's a potential for a pullback. Now, when I say pullback, really what I mean is a cooling off period, because at the end of the day, that news is bullish and should propel prices, potentially at least, to upward and onward, for the next few weeks, possibly the next month or so. Question is, does it happen right away, like I said, or do we get a bit of a kind of a cooling down period, or maybe a little bit of a pullback, especially where we're at resistance, right? This would be a good time if you've been in positions and have enjoyed some of this upside for the past week or so, that you could take some profits and, potentially look to get in on some sort of a pullback. So that's kind of the idea that we're watching for. However, doesn't mean it has to happen. What we could see, or what we'd like to see, if we want to see some more short-term upside, is tomorrow's candle to break above. We need a body of a candle to close above these 200 moving averages and this upper trend line. And then the following day, if we get a retest and the candle body closes above again, that could be a good chance to enter, kind of the breakout of the 200 EMA, and then we'd have targets, of course, that would be up here at these next major levels of resistance. You can kind of see that we have this little area here. Let's go ahead and put Alt-H on the keyboard. I'm going to go ahead and change this to just some white lines. You'd have this area up around 4,050. Of course, next stop after that would be something like the 4163. We can use this fib retracement tool on just this most recent swing to get some ideas if there's any confluence with those targets. You might see something like, you can see that the 1.272, actually, a better way to do this, honestly, especially we're on the daily chart, this isn't really short-term ideas, would be to go with this swing here all the way down to that swing low. And let's go ahead and just see what areas we have. So right now, we can see that we're approaching the golden pocket, which is the 618 to the 0.65. Let me get rid of these lines here real quick. That's this zone here. And that's just about where we're at now. We're going to be shortly, possibly. It looks like the 786, which is a very common area for something to pull back, or in this case, a retrace, pump to the upside. That sits at about 4150, and that will be kind of the next major upside area that we'll need to flip. You can see it with support back here, resistance all in here, resistance right there. So that'll be kind of the key area to the upside. Any short-term pullbacks, or cooling off periods or areas to look out for there. Let's delete this. would be, you know, either a retest of this 0.5, you know, maybe we put in some sort of a double bottom there, or realistically what we'd like to see is a higher low, maybe somewhere back here at this little level at about, you know, 3,900. So that's kind of the areas, at least in the short term, that we'll be keeping an eye on. And then just real quick before we move on to Bitcoin, I want to give you guys an update on a chart that I spoke about in a video a couple of days ago. It's the total 2. If you're unfamiliar with this chart, basically what it is it's the total market cap for all of crypto, excluding the market cap for Bitcoin itself. So it's Ethereum and all of the altcoins. If you look over here on the right, it says it's at 499, basically $500 billion makes up Ethereum and all the rest of the altcoins. Again, not counting Bitcoin. What we spoke about in the video the other day was we were looking for a potential break above this yellow zone, which is on my chart, green zone, I guess, but this yellow line anyway, right here at about 500 or 490 billion. And we're in this potential descending triangle, which is a bearish pattern in itself, just meaning it statistically has a better chance of breaking at some point to the downside. You know, have this top trend line, or the top of the trend line up here, then you had a pullback, then you had the, you know, a lower high. You kind of have this same zone acting as support. Essentially, it's making this descending triangle. But what we spoke about in the video the other day was we were looking for, if we broke the top of this this area, for maybe a push up here to the top of the trend line. You know, even if that is ultimately ends up being a lower high in the short term, you know, the next week or, you know, month or so, you could see some more upside out of altcoins. You know, Ethereum, of course, and then, you know, trickles on down to the other altcoins. Well, we got the breakout. The areas that we'd be targeting should this continue and this area is able to hold and flip a support, this area of about 490 billion, you know, this area back here that was support, 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 been resistance back in here, a little bit lower than that, of course, at about 470 billion. But anyways, the 490 billion is what I'd like to see hold. You can see it was most recently resistance back here in December. And if we get the push upwards, the target areas we'd be looking for would be this 200 EMA, which is around 530 billion, and maybe as high as like 535 to 540. And if that's the case, of course, we'll be talking about a lot of the altcoins over the next week or two, maybe even a little bit beyond that. And, you know, some targets for different coins we might want to trade, and it'll just overall be a good thing for the market. So we'll keep an eye on that. Next up, we're on the Bitcoin daily chart here on Binance. I had this chart was really messy the other day, so I was using a Huobi chart. I went ahead and just cleaned it up. We're going to kind of start fresh now with some new ideas. What we spoke about in the video the other day was that Bitcoin was in this potential. It's not a real valid pattern, not something I would trade anyway, but it's been in somewhat of a falling wedge here. You had this low, you know, this high, another touch of the trend line here, a couple touches of the bottom trend line there, and we were talking about potentially a push up as high as like 18,500-ish, and so far we've gotten that. We actually broke out of this. Like, again, it's not something that I would look at as a tradable pattern. I mean, it would have targets that we could go over, but I'm not going to in this video. Ultimately, I just would trade the horizontal, you know, lines of support and resistance at this point. But the biggest thing is you had this ascending triangle that we spoke about the other day in my video, where you basically had price action put in a low, a high, you know, higher low, another higher low. This is actually a double bottom, and then we were looking for a breakout, and that does a measured move that I would potentially, you know, eye to the upside. We talked about this in the video the other day, and that actually has a measured move up back up over $20,000. You can go with the more conservative side actually and say that, hey, this right here potentially was a bull trap, and that the real top of this neckline of this pattern is at about 17,350. You can take that measured move as well. This would be the more conservative measured move, and that would give you a target of somewhere up around the 200 moving average, which is what we spoke about on the we spoke about on the video the other day as being, you know, kind of my area of interest to the upside. It sits right now at about 19,500. With each passing day, that will come a little bit lower, but that would make sense to me. It also has confluence back here, is just being an area price action is interacted with on many occasions. Really, the exact area is about 19,250, which is what I mentioned in the video the other day. But one thing that I do like that I'm seeing right now, as we've kind of broke above this neckline of the ascending triangle, is that we got volume. I always talk about that on my videos, how important volume is to me. And you can see this is the biggest spike in volume we've had since the beginning of November, when we had this big sell capitulation candle. I believe this was the FTX candle, right? And this is the biggest candle that we've seen since then, but in this case, it's not capitulation, it's actually a bit of a pump, which is good. Now, in the short term, if we zoom into the 4-hour time frame, let's go actually even as low as the 1-hour time frame. Okay, so here we are zoomed in on the 1 hour, and you can kind of see that if we double click here, that our stochastic RSI on the shorter time frames kind of needs a reset. It's actually pushing downwards as we speak. You have the RSI, which is still up here around 70, which also needs to cool off. It's actually at 63. I apologize. Just the moving average on the RSI is at 70, and your MACD on the 1 hour is also pretty overheated. So really, in the short term, a pullback would make the most sense. In fact, I posted something in my trading group about an hour ago. On the 5-minute chart. I can post that image on the screen actually, but basically what I had done on my phone was just drew a quick very basic TA, but I just drew this rising channel basically, and I had said that a pullback in the short term could make sense, and that if you took the measured move of this pattern to break down, which it looks like it is, it would be a nice retest of around these moving averages, probably even get a little bit lower, honestly. Or at least it wouldn't scare me if it went a little bit lower and actually tested this area back here that was resistance, and resistance, and where we saw the breakout volume, which happened right around 18,350. That's the area we'd like to see hold. Now, if we get a little wick below it or something on a lower time frame, that wouldn't scare me as long as your upper time frames, like 4-hour and above, continue to close candle bodies above it. The thing is short-term time frames can sometimes scare people in or out of trades based on just wicks that happen, and all they really are, in my opinion, is just market manipulation, things like that, to scare people, or liquidation candles essentially for people that are trading with too high of leverage. But if you're on the higher time frames, this little pattern breaking down and retesting this would just be, if we hop back over to the 4-hour, just a retest of basically this trend line, the breakout of this trend line, right? It'd just be a retest. At that point, we'd look for some more targets to the upside that we spoke about. Big key area being 19,250, which we just about got to on the slash push up. That'll be the next area that I'd expect at least one more push up to again. At that point, question is, do we see a bit of a double top, which often happens, and then a pullback, of bigger proportions at that point? Or can we get the breakout and flip that as support, in which case we'd be looking at something like 19,800 and maybe even 20K on our next leg up. So that'd be kind of plan A, plan B, but in the short term, I wouldn't be scared of a retest of about 18,350 to 18,400. In fact, as long as we can hold above that and consolidate a bit, I would look at that as kind of the next opportunity, or buying the dip, so to speak, even though it's just a small pullback, for kind of the next leg up, potentially. And last but not least, just one quick update on my link trade. This is the daily chart, but we're going to zoom in actually to kind of show you how I've been managing the trade. I've only made one change so far, but it is a key change, and that's that we hit the underside of my first target, which I spoke about in wasn't yesterday's video because I didn't make one yesterday, but the day before, and that was that area just under 640. So I took 25% of my profits off the table. In fact, let's zoom in now to the 4-hour just to kind of show you what we're looking at. So the biggest thing we talked about in the first video I made a few days ago was breaking and retesting and turning this blue zone as support. We also had this bit of a bull flag that we were talking about breaking out of and retesting. We ended up getting a giant wick down to this other zone, which ended up on the 4-hour just being a retest of the 200 simple, which actually made a lot of sense. But we did get volume follow through on that wick. And a lot of people actually, if you want to just dumb down a real simple strategy in trading, something that my mentor actually talks about quite often is just what's called the long wick theory. You can see that this giant, now this is of course kind of right around the time that a lot of the we were waiting on the CPI data, I believe, so of course you had a bit of what's the word I'm looking for, volatility. There you go. We had some volatility, so that was to be expected, quick wick up, quick wick down, but ultimately it's good to see that this got bought up. And the reason why, to confirm that even more, was just this giant candle, right? So you had volume come in, and then you had this get bought up. Ultimately, the top of this is where it didn't quite close above it, but very close. And then now you got to push back up to my first target. I took 25% off of the table and moved my stop loss actually to entry, which is just under $6.07. In fact, I actually added a little bit more to the trade, so I'll post that image on the screen. I think my updated entry is like 607. something or another. So I'm still in profits, but that's where my stop loss currently is, which is underneath this yellow zone that most recently got retested. So at this point, I've made some money and I can't lose, right? My stop loss is at break even. That's just how I typically manage my trades. Next thing I'd be looking for, if you were wanting to look for an entry, or you haven't been trading it yet but you're looking to, would be another retest of anywhere between about 620 and 625. As long as you're using low leverage, no financial advice, but as long as you're using low leverage, you shouldn't be worried about quick wicks back down here to like 610 or 615. That's just inevitably what happens, it seems like, with, again, the market manipulation and liquidation candles. But ultimately, as long as the higher time frame candles can hold above, a retest of that would make sense. Or if you zoom in even more, a retest of kind of where we're at now is not a bad entry. It's the retest of the breakout of this little falling wedge. We don't have much volume coming in, which is the reason why I would look more at this as being kind of your zone to eye. But, a bounce here could also make sense. And again, at this point, my next target area would be just under 670, something like 665. We'll take 50% at that point if and when that target's hit. And then at that point, I would do my stop loss back up here somewhere below my last target. So I'll keep you guys posted on that. Just want to give you a quick update. Again, I'll also update you guys on Twitter and things like that. You can always see the link in the description for my Telegram group, where I give kind of more up to the, I shouldn't say up to the minute, but just more updates, more often than I do obviously on my videos. So there you go. And with all of that being said, we're going to go ahead and end today's video right there. On the way out, if you feel like doing a huge favor, leave a comment, or of course, a thumbs up on the video. It helps me out, of course, tremendously. And if you haven't subscribed yet, please remember to do so, and we'll catch you in the next one. It's